Top 20 Investments of All Time. How to Make Money by Warren Buffett. Warren Buffett, tenderly alluded to as the Oracle of Omaha because of his underlying foundations in the previous Nebraskan capital, is the substance of the American Securities Exchange. Buffett is maybe the best and most renowned financial backer in current history and has a value of more than $108 billion. He has become famous in the market through a worthy money management procedure that focuses on long-haul monetary standpoint over monetary benefits. The absolutely most over-the-top ventures that Buffett has made have offered him similarly incredible returns. So in this video, we will tell you about the top 20 investments of all time, How to Make Money by Warren Buffett. The video is amazing, so stay till the end. But before we start, don't forget to subscribe to our channel and hit the bell icon to get started. Number 20. Stock market options may not be ideal for compensating managers. Unexpectedly, the way of talking about options much of the time depicts them as desirable because they put chiefs and proprietors in a comparable monetary boat. As a general rule, the boats are far various. No owner has at any point gotten away from the weight of capital expenses, while a holder of a fixed cost choice bears no capital expenses by any means. A proprietor should weigh potential gain potential against disadvantage risk. A choice holder has no drawbacks. 1985. Number 19. Even a commodity-like product can be a fantastic business. The main fixing in Geico's prosperity is complete bottom working expenses, which put the organization aside from, in the natural sense, many contenders that offer collision protection. The difference between Geico's expenses and those of its competitors is sort of a channel that safeguards an important and much sought-after business palace. Nobody comprehends this canal around the palace thought better than Bill Snyder. Number 18. Be fearful when others are greedy. What we cannot refuse is the periodic episodes of two super infectious sicknesses, dread and avarice, will ever happen in the speculation local area. The planning of these pestilences will be eccentric. Consequently, we never attempt to expect appearance or flight of one of the other sicknesses. 1986. Number 17. Investing in fast-changing industries may be tricky. The financial territory that is ever moving viciously is the ground on which it's hard to construct a defense like a business establishment. Such an organization is generally the way to support effective yields. Serious change and extraordinary returns, as a rule, don't blend. Most financial backers act as though the exact inverse were valid. That is, they are, as a rule, give the greatest cost-income proportions to colorful surrounding organizations that hold out the commitment of hot change. Number 16. Think twice before selling stock of an outstanding company. Truth be told, when we own segments of extraordinary organizations with exceptional administrations, our number one holding period is for eternity. We are the polar opposite of the people who rush to sell and book benefits when organizations perform well, but they determinedly hold tight to organizations that dishearten. 1988. Number 15. Don't confuse cheap with a good deal. In a troublesome business, no sooner is one issue tackled than another surface. Never is there only one cockroach in the kitchen. It's much better to purchase a superb organization at a fair cost than a fair organization at a brilliant cost. Charlie comprehended this early. I was a sluggish student. Number 14. A great business has pricing power. A monetary establishment emerges from an item or administration that 1. Is required or wanted, 2. Is figured by its clients to have no nearby substitute, 3. Isn't liable to cause guidelines. The presence of each of the three circumstances will be shown by an organization's capacity to consistently value its item or administration forcefully and consequently to produce high paces of return on capital. Number 13. Stick to your strengths or your circle of competence. Our absence of tech experiences, we ought to add, doesn't trouble us. All things considered, there are a large number of business regions wherein Charlie and I have no extraordinary capital designation skills. Foreseeing the drawn-out financial matters of organizations that work in quick-changing enterprises is essentially a long way past our edge. Assuming others guarantee present expertise in those ventures and appear to have their cases approved by the way of behaving of the Securities Exchange, we are neither jealous nor imitate them. Number 12. Don't agonize over your investment mistakes, but do analyze them. Struggling with blunders is a mix-up. However, recognizing and breaking down them can be helpful. However, that trading is uncommon in corporate meeting rooms. There, Charlie and I have never seen an open posthumous of a bombed choice, especially one including a procurement. A prominent exemption for this never think back approach is that of the Washington Post Company, which unfailingly and equitably surveys its acquisitions 3 years after they are made. Somewhere else, wins are trumpeted. However, moronic choices either get no development or thinking. Number 11. What businesses should you invest in? Charlie and I look for companies that have A, a business we understand, B, favorable long-term economics, C, able and trustworthy management, and D, a sensible price tag. The dynamics of capitalism guarantee that competitors will repeatedly assault any business castle that is earning high returns. Therefore, a formidable barrier such as a company's being low-cost producer, Geico, Costco, or possessing a powerful worldwide brand, Coca-Cola, Gillette, American Express, is essential for sustained success. 2007. Number 10. What businesses to avoid? The most awful kind of business is one that develops quickly, requires critical funding to induce the development, and afterward brings in practically no cash. Think carriers. Here are a solid upper hand has demonstrated subtle since the times of the Wright brothers. The carrier business interest in the capital since that first flight has been unquenchable. Financial backers have dumped cash into an abyss, pulled in by development when they ought to have been repulsed by it. 2007. Creator's note. Mr. Buffett appears to have changed his views since then on the aircraft business. He right now has a holding in both Southwest Airlines and Delta. Number 9. What are the makings of an interesting acquisition target? Demonstrated reliable procuring power, future projections are unimportant to us, nor are circle-back circumstances. 2. Businesses acquiring great profits from value while utilizing practically no obligation. 3. Management setup, we can supply it. 4. Simple organizations, assuming there's heaps of innovation, we will not figure it out. Number 8. Neglect short-term price fluctuations, invest for the long term. Infrequently, the democratic choice of financial backers, novices, and experts the same, verge on lunacy. Since I am aware of no real way to dependably anticipate market developments, I suggest that you buy Berkshire shares, provided that you hope to hold them for no less than 5 years. The people who look for transient benefits ought to look somewhere else. Number 7. Do not speculate with borrowed money. Another admonition. Berkshire offers ought not to be bought with acquired cash. There have been multiple times beginning around 1965 when our stock has fallen around half from its high point. Number 6. As an investor, what type of behavior spells trouble? Financial backers can, by their way of behaving, make stock possession profoundly dangerous. What's more, many do. Dynamic exchanging endeavors to time market developments, insufficient enhancement, the installment of high and pointless expenses to supervisors and guides, and the utilization of acquired cash. Number 5. Perform your analysis. Don't ask the barber whether you need a haircut. Speculation investors being paid as they are for activity continually encourage acquirers to pay 20% to half expenses over market cost for openly held organizations. The investors let the purchaser know that the premium is legitimate for control esteem. Number 4. What should you share with your shareholders? We plan to furnish you with the data we would wish you to have to assume that our positions were turned around. With you being the detailing supervisor and we the non-attendant investors. Number 3. What exactly led to the 2008 financial crisis, which thus prompted the Great Recession? In the years of going before the implosion, a disastrous and frequently degenerate example of home loan creation prospered by which one. Number 2. Include the cost of stock-based compensation when you report earnings. To leave out stock-based pay and detailing profit, they ought to be expected to conform to their proprietors one of 2 recommendations. Number 1. How to live a long life. During the gathering, Charlie and I will each consume sufficient Coke, C's fudge, and C nut week to fulfill the week after week caloric requirements of an NFL lineman. Sometime in the past, we found a crucial truth. 2015. That's all for today. I hope you liked the video. Don't forget to subscribe to our YouTube channel, press the bell icon for more updates and notifications. Stay safe, and we'll be back with another video soon.